we had purposely decided to do this every couple weeks, and the spring market sure ran us over. And apologize that we haven't gotten together in a little bit, but we have so much to talk about today.
We do. What a crazy market we're in.
We are. These are historical times.
They are.
They really are. It is day by day, property by property, city by city, insane statistics that change so much week to week. So we have lots to talk about. I thought we'd get together today and just give some encouragement to buyers out there, and some tips and some tales from us pros about how to get through this process, because sometimes you have to go through it a couple times.
Oh gosh, do you ever? And I've kind of found like it might take 4 to 5 offers before it kind of clicks.
Yep.
I feel sorry for those lower down payment clients. I had a couple that were looking in Eden Prairie. They had 3% down, and they're going against 10, 20% down, appraisal gap guarantees, 20, 30,000 over list price.
Right.
And you have to be diligent. And yet I've had 3 and 5% down to get accepted offers. I've had VA loans with 0 down get accepted offers. So it's all about your timing, being ready, and who you're working with. The presentation that your agent has is such a big deal.
It is. It really makes a big difference. I had a client that received 6 offers on their home, and that's pretty common these days, is to evaluate a handful of list of offers, and of course went right to the top one, right? Of course. Yep. And I get it. We all do. But the merit of the agent and the lender is so important now. It's never been more important. And it messed them up, and they fell, and we had to reshuffle. Because I tell you start to see even a little bit of vulnerability within that agent or lender, and you're done, and it's a fast move on to the next offer. But it's interesting, like when you talk about the kind of loans that are being accepted, of course, cash and conventional, right?
Yeah.
Our brokerage is reporting that between those two, cash or conventional, those are close to 90% of our deals right now. Okay, wow. 89, 90%, right? Yeah. And then we're reporting about 6% are FHA and maybe 1 or 2% of VA for our brokerage. So it really narrows down. Of course, agents are concerned about VA and FHA processes or appraisals.
Yep.
We'll talk about appraisals. But it's interesting, whenever I'm in a situation where there's multiple bids, there's always seems to be one cash offer in there, and that's always the one that kind of makes the seller stop and think. It's maybe not always the best. It might not be always the highest offer, but it might not be the best one either, because it's really about presentation and the full product.
Yes, absolutely. And it's interesting, even on some of the 20 down. So I had a transaction in Eden Prairie again, townhouse. They had 4 offers. They had a 20% down, guaranteed appraisal gap, non-refundable earnest money. The appraisal comes back about 20 grand light, and all of a sudden there's a problem. And in that transaction, instead of 20% down, you could kick it back to 15 or slightly less and make up the difference. And all of a sudden, it was really an unknown mortgage company, and the realtor was a little bit suspect together, and it felt like they maybe worked together because this agent called me as they were having challenges with it. It finally ended up closing, but they had to renegotiate the sales price because all of a sudden, with 20% down and an appraisal gap guarantee, they didn't have enough money. It was, there are unscrupulous folks out there that sometimes the way they present themselves isn't really what's possible. And that is where you've got to be with a reputable real estate agent and a reputable lender.
Oh, absolutely. Yeah. Wow. What a deal. I mean, in writing, that should have not had any problems.
Not at all.
Right?
It's all guaranteed. Yeah.
That's so frustrating, those poor sellers. Because here's the thing, in that the sellers could have got all upset, and then they'd have to have some sort of lawsuit and lose market time. Well, no, you don't. Yeah. So you roll with it and you renegotiate, but it shouldn't have been that way. And I'm certain, because that listing agent was calling you, you were concerned about the parties on the other side. You have to trust your gut.
Yes.
Yeah.
Absolutely.
that leads me to one of my other tips for today is kind of knowing what you're going to do when you walk into that house. So buyers, we view them all online, and then you go into that. You might only view a few homes before you put in an offer, right? But really, you need to be synced up with your agent before you even walk in that home. Like, okay, this fits 80% of my wish list. Okay, so let's see, what's our down payment going to be? Are we going to do an appraisal gap? What's going to be our earnest money? So that really walking through that home is kind of that final blessing that, yes, this is a house I'm going to make an offer on, because you tend to have to do this within a few hours.
Yeah, you have to react immediately, Amy, because, they'll call for highest and best maybe that day or the following day. But if I had another transaction this weekend where borrowers were going after a 20-acre parcel, and it was a specialty property. And you would think that if you're in the $750 price range, there may not be multiple offers. This had multiple offers. The sellers came back to my client and said, if you increase your price $5,000, the property's yours, but we need an answer in a half an hour. And they just couldn't go there, and they ended up losing it. But you have to react so quickly, and you have to have your numbers together. So what I typically do on the weekends, you would call me. Our client is pursuing this house. You get a good faith estimate. You get a specific approval letter for that property. But then as prices arise, I'll call and have a conversation with the client just as far as, okay, if you have to make up an appraisal gap, where's that money coming from? Are you going to take a loan on a 401k? Are you going to get a gift from a family member? Do you have the funds in your bank account? Because you could get that accepted offer. The appraisal could come in low, and all of a sudden you're thinking, oops, where am I going to get that extra 20,000?
You need to know, and that's a hard conversation for us agents to have, right? Because we're almost saying, okay, so the lender requires an appraisal. Okay, great. But an appraisal is one person's opinion. That appraiser, it's a $400 fee for an appraiser to go through a house and do a report for the lender. So that's one person's opinion. Sometimes, important properties are missed. It's just unfortunate. What's Alaris's feeling on getting a second opinion appraisal when they are low?
So we have a process. If the appraisal appears to come in low, first, I have to evaluate it. I'll send emails to both the buyers and the listing agent. I will give them the addresses of the comps. I won't give the listing agent the appraisal unless the buyer allows me to do that. And then what we have to ask them is, are there any better comps out there? Are there comps that our appraiser is ignoring? And the thing that I think consumers and even some realtors have to understand, the appraiser is not going to step over or go another mile out to hit a number if there's a comp that's in the neighborhood similar to our property that just closed. They're looking for similar properties, same style, bedroom, bath count, square foot. The other thing is 90% of the value of the house is above grade. So, if you've got a 2-story with a finished basement, that finished basement value may only increase 20,000, So the appraisers what would happen in our transaction, I would review the appraisal. I would go out to the agents, ask if there are any better comps. I would then review those, compare the MLS online pictures, the square footage, bedroom count, and try to determine if this is a comp that could be used. At that point, I put a report together. I send it to my head of underwriting. She reviews it. She then determines if she feels the appraisal isn't satisfactory. At that point, they would take my data, my comps, send them to the appraiser, and it's still the appraiser's will on whether or not they will change the appraisal. So if we get an appraisal in and it's not at the sales price, it doesn't mean, well, we're just going to go order another appraisal, because it appears to take you into a steering, or manipulating and controlling value. And since Frank died in 2008, 2009, that relationship is totally changed between lenders and appraisers.
Yep. It's interesting. I was working on putting a property on the market. So I talked to the last 3 agents that sold in the neighborhood recently, like just in the last month. And one of them, a couple of them had no appraisal problems. One had one appraisal problem. And I'm like, you're kidding. There was this great comp. They're like, yeah, the appraiser missed this great comp right around the corner. I'm like, well, how is that even possible? So I'm like analyzing, like, and it was the most expensive one in the neighborhood. Always is, right? So I'm like, and it was 2 months old. So I'm circling, trying to figure this out. I'm like, how did this person do this wrong? And I realized that the listing agent had the incorrect pin on the property, meaning, just the map, just the latitude, longitude that we put on our maps, so that when like an aerial view will bring you right to the property. It was just off. And it was off because it was a recently built home. So those often maps are very new. So you have to literally toggle to it. So that's data has to be perfect because you want that appraiser to find it. They don't know every street, every corner. So, that would be a really easy thing I think that, a lender would say, oh my God, it was around the corner, and it wasn't on the map. No wonder why it wasn't in here. So there's just crazy stuff. I mean, and that's a reason for, I think, an appraisal to be re-reviewed. The market is so hot. Buyers are buying homes for more than what the bank says they're worth, period. That's just how it is. In my opinion, it's like the appraisal just has to be at the point that it is. But if you're going to go 20, 30, 40K over list, you have to be willing to absorb that cost.
Yeah. What's really interesting, Amy, we close 10 to 18 loans a month, a purchase. And we've only had 3 this entire year that came in low.
It's not bad.
And we've had offers in South Minneapolis, 80,000 over list price that appraised out, which has really surprised me. One thing that some appraisers are doing, they're using time adjustments. So they're taking older comps, they're taking into consideration our market's accelerating at probably more than 1% appreciation a month. And they're adding time adjustments to bring the value up. And I feel like they're working really hard now. I have a complex property, I think it was in Chan, and we had 3 appraisers that rejected the order. They didn't even want it. And I think part of that comes from, it's going to be a complex appraisal. It's going to be a lot of work. And they're just basically saying, I don't want it. I'll go take the next one.
Eek.
Yeah. So that in and of itself also could tell my buyer and tell the realtors, is this a little bit of a heads up that we may have some valuation issues? Now, on the other side of it, if I've got a borrower with 20% down, we just had a couple yesterday that we locked in, we had appraisal waivers. So even though they were way beyond the purchase price, because our clients put down 20%, our internal underwriting system accepted that value, and we don't even have to do an appraisal.
Yeah, it seems like everything since the beginning of 21, it seems like anybody with 20% down, they'll say they'll just waive the appraisal process in general. I mean, why spend that? So and then have an issue on the other side of it. It's very common now. And sometimes when I get a 20% down client, it almost feels cash-like.
Yeah, for sure. Because all of a sudden, it totally changes the timing of how quickly you can close.
Yeah.
But this is all an internal underwriting mechanism created by Fannie Mae and Freddie Mac, the 2 mortgage corporations that set the rules for mortgage. What they've been doing since we had our big meltdown, they've been collecting all this digital information. So as all these sales are going through the market, this electronic system's gathering all that information. When we run the loan through the automated underwriting, it goes out and grabs that valuation information, and then it'll basically come back and say, do we agree with this value? And our system will say yes. We accept to waive the request for an appraisal, which it's like everyone has a sigh of relief, because now you don't have to worry about any issues that an appraisal can bring up.
Right. And now we don't have the problems of 2020 where the concern from offer to closing was people staying employed.
Yes.
This wasn't that long ago.
Yes.
We were sitting in this market last year, this time, going, oh my God, as an agent, we're not supposed to talk about this, but you'd get an offer, and that buyer's agent would just share, hey, they're gainfully employed. Okay,
Yes.
thank you. I can't ask you anything more.
Yeah.
But we don't have to worry, knock on wood, the furloughs. I don't know.
No, you're right.
One thing that has definitely gotten better from last year.
Definitely. You know, you and I remember how it felt in March, even wondering if real estate could continue with COVID. And we found ourselves in quite a market. Pretty incredible. The Case-Shiller report just came out on appreciation. And it looked at the year-over-year appreciation throughout the country from March of last year to March of this year. Do you know that the Case-Shiller average nationally is 13.2%? 13.2. Minnesota's about 12%.
I believe it.
Phoenix is 20%. San Diego, 19%. Seattle, 18%. It's kind of unbelievable, this appreciation that we're seeing.
Isn't that something? I was on a call with a bunch of relocation directors that I work with across the country, and this is not just Minnesota, this is everywhere. It really is. It's very interesting to see, and then that's just an average. And then if you go into a hot pocket of like a hot location in San Diego, you're right on the beach side, take that 18%, and you're going to 30% because it's got that uber need of wow factor. So interesting. It's just really something. It's a fast moving market for buyers. You need to be prepared. And when you're going to get pre-approved with Alaris, you need to have some time, because Alaris, you guys offer great service, but you also guarantee to us listing agents that things are going to close on time. So when someone's starting the process, how much time should they have to get pre-approved before they go out with their agent?
To be perfectly honest with you, if someone went to our website, made an application, that would probably take 25 minutes. Then they have to upload pay stubs, W-2s, bank statements. Honestly, as soon as they get that in, we'll have the approval done within 24 hours. We've done it in less than that. It's all about the client's ability to get everything to us. If things are incomplete and they piecemeal them in, it's any human nature is if you're super busy and you have someone making an application and it takes them a week or longer to get stuff in, you tend not to put any energy into that until they're completely done. If we have a borrower that sits down for an hour and a half and knocks it out, they'll be the first thing we grab. Taylor on my team, my assistant, we're always tracking that online system. And we know as the minute someone starts typing in an application, we're notified. So we will check in and check that daily to see if we have enough documentation. As soon as we have enough documentation, we'll work on the pre-approval. And that will literally take half an hour, maybe. We have to verify income and assets. Where it gets tricky is if a borrower has income with commission, bonus, overtime, fluctuating income to where we have to get back to their employer and order what we call verifications of employment. This is when you have income from part-time or it's commission and you have to do a 2.5, basically a 2-year average. Then we have to reach out to the employer's payroll, and then we're kind of, waiting for that to come back before we can lock in the income. But the thing that we do here, and certainly on my team, is you have an ironclad approval. There will be no doubt. There will be no concern that if you go out and write an offer on a house that it's not going to close, because we do everything up front. And then we guarantee it.
Oh my God, it's fantastic. Just delivering that message to a listing agent is lovely, or receiving an offer from Alaris is lovely, because it's just no worries. I just feel like it's a cash deal, like it's just a professional transaction. And as much as this market has gotten rowdy, we really have to have the professionals involved to maintain structure and to be professional through the process, because that's going to get you somewhere when you're one of those bids on the table. You've got to have as many things pointing in your direction as possible.
Absolutely. I always like to call the listing agent, introduce myself whenever the offer's going in, nights or weekends. And I would say that probably 25-30% of the time, the listing agent says, thank goodness it's Alaris.
Yep.
I worked with such and such. Your company's great.
Yep.
And having that local recognition really helps win offers, even if you're not the highest price.
Well, it's interesting because I'll go to review bids with a seller, and a lot of times you're not there. Now I'm on a call like this, and I'm going over spreadsheets and things, and of course the looking at all the range of prices and the types of buyers that are on the table, and then they'll always be like, okay, so what else? And I'm like, well, hey, I got 10 bids. One loan officer called me.
Yeah.
That's it.
Yeah.
It's a call. And, we don't need to sit and talk for 20 minutes. Just even that voicemail, like, hey,
Yes.
they're super awesome. I've helped all their family members. They're Johnny on the spot. Just any of those things that give us more excitement about that buyer helps. And again,
Yes.
I'm serious when I say I only maybe get a call here and there. So appreciate that you do that. And also, there's just so many other great services, but that's just a small little token. You just got to be better than the others.
Yep. We're a team. You and I consider ourselves not only on the team of the buyer, but of the sellers and the listing agent, because we all want success.
Yeah.
And how can we work together and communicate to each other so that everyone's very comfortable?
Yep, absolutely. Yep. And that's how it should be, right? Yes, we represent our parties, but at the end of the day, they have to come together. So we want to make it as easy as possible. And it isn't easy. Any buyer going out there, I think Brian and I we do the best we can to explain this is a process. Our brokerage is reporting, before an offer is accepted, a buyer is making at least 3.5 offers, almost 4 offers before they get accepted. And that's regardless of price range.
Yes.
And that's the average. So guess what? There's buyers out there that have made 8 or 9 offers. Okay. And we have to maintain a great relationship. That's the hard part. We don't want, we do a great service. The market is what it is. They just, you need to power through, and eventually that property will be there for the right buyer. It just requires patience. And it requires patience and preparation. Absolutely.
I've got a client that I think the last 5 or 6 weeks now, every weekend they're out looking. They've now gotten to a point where, Brian, we're looking at these 3 properties this weekend. Can you just give us the pre-approval letters for each of these now, in case we like it, so we can just send it in right away?
I know, right?
And they're in a $500,000 price range, 20% down.
Yep.
They have put offers on at least 10 to 12 properties and are still waiting. Still not there. Yes.
That's wild. So you said $500,000 price point, and that used to be luxury, by the way.
Yes.
Okay, in Minnesota, right?
Yeah.
I'm just looking at our activity sheets. Our MLS is showing that showing activity between 500,000 and 600,000 in the entire metro area is up 40%. Now that's not to last year, because we can't compare to last year. We were just coming out of COVID, and we had a little bit of we had some issues in Minneapolis for about a month.
Yep.
So we're comparing to 19. So we're up 40% at the $500,000 price point. 40% in showing activity from 2019. So and those lower price points, like 250 and below, those of course are seeing 20% less showings.
Yeah.
I think for a couple reasons. Those homes aren't available. They might be part of the moratorium. We can't get these homes on the market either. Waiting for that to lift. Hopefully that will be a conversation we'll have very soon in one of our lives. One of our live meetings here, because that's a huge thing we need that to lift. So that will help. So it's pretty wild to watch where the showing activity is really flying at 40% at that $500,000 mark. Wow.
Let's talk real quick about interest rates.
Yes.
So 3.5, 4 months ago, 30-year fixed rate was at 2.5. Which was phenomenal. Lowest ever historically recorded. And then a few months ago, the word inflation started hitting. The Fed started talking about that. We're taking on all this debt. The cost of goods are going to be going up. The economy starts heating up, and it has a very strongly negative effect on mortgage rates, because inflation erodes at the mortgage bond. So whoever buys that mortgage bond, if the cost of goods go up, your profitability goes away. So what happens is mortgage rates start moving up. There was a period where we were 3 to 3 1/8, and now all of a sudden, within the last couple of weeks, although there's a fear of inflation, the market's kind of calmed down a little bit, and we're at about 2.875. If you paid probably a full point, you could get to 2.75. So again, here we are just starting in the summer, and rates are still incredibly low.
Wow.
And do we expect them to go up through the course of the end of the year? We do, but my gosh, think about it. In 2018, we were expecting rates would be at 5.5%, maybe 6% by the end of that year. And here we are below 3%. It's such an opportunity.
And last month when the rates went up to about 3%, it didn't change the activity at all.
Wow.
Didn't change our showing activity. And of course, showing activity went up. Buyer demand is there.
Yeah.
I think, I mean, I don't want rates to go up, you know, of course,
No.
But I feel if they went up, it wouldn't change a lot.
Yeah. Well, there's just so much demand because of the lack of housing, and I was reading a report earlier today, and they were talking about clients, home buyers getting discouraged and thinking this bubble's going to burst and I'm just going to wait. And they said, look, if you're looking to buy a house in the next couple of years, now is the time to be doing it, and putting it off another year, rates will most likely be higher. Prices will be another 11, 12% higher. And those that are out there right now, I think they just got to hang tough and keep digging in and react quickly.
Absolutely. That's all you can do. So, So if any buyers are out there that are looking to purchase, want to talk about this marketplace, it's historic, it's fun, it's for the toughest buyers out there for sure. So Brian, I would love to help you get, number one, prepared for the market so that you're out there so that you can best perform with us as your partners. So
absolutely.
Brian, thanks so much for getting together. It's been a while. I feel horrible. We're going to get back on track so we can give out some really good information because there's so much great information now. Week to week, great statistics that we can share.
Yep, you got it.
Awesome. Have a great day. Thanks, everybody.
Thanks, Amy.
Yep.